Good morning, everybody, and welcome to Cash Out. My name is Kenneth Stuna, and Cash Out is my weekly YouTube show where I talk about what happened in the stock market last week and what might happen in the stock market next week. If you were paying attention to the stock market last week, it was quite a roller coaster. There were days where the market was down an unbelievable amount, and my personal account value was just getting completely hammered, down so much you can't believe it. And by the middle of the afternoon, every single loss had been erased and my account was positive. It was a total roller coaster. So the question that I'm always asked is, how do you trade in markets like that? And the answer is, I usually don't. I usually sit those kinds of weeks out. Reason being, it just seems too much like gambling. You know, you're trying to guess. Is this it? Is today the last day that we're going to have a really big catastrophic down day? Is good news coming tomorrow? If good news comes tomorrow, then the markets will rally. And then it just seems too much like a gamble. I see a lot of inexperienced traders calling every single down day an opportunity to buy the dip. I caution against that because you could have several down days in a row where you think, gotta buy the dip every day, gotta buy the dip every day, and you're throwing more money into a stock that just keeps dropping, and then potentially you fall off the cliff, and then we're in real big trouble. It's like the beginning. Like if you look at last March, we saw a little bit of selling, and then boom. And using last March as an example, it would have been a great time to buy when everything had sold off, to start scaling in or start adding to your positions. My concern is that a lot of people who are new and inexperienced are just going to assume that you buy every single dip, but then you have no money left over to really add in a significant way to any of your positions when the shit really does hit the fan. So we want to wait for things to consolidate. We want to wait for more concrete news to come out, because all the news that was coming out last week was maybe this, maybe that, we're not sure. You know, it was a lot of inflation talk. If you want to learn more about inflation, you can watch last week's episode where I talk about inflation a little bit. And it was like, inflation, is it coming? And then the markets would plummet, and then Jerome Powell, the head of the Federal Reserve, would come out and go, hey, not so fast, not really. It's steadily rising. And I did give a couple analogies which are worth repeating in this episode. Inflation is kind of already here. All right, we already see it when we go to like our favorite sandwich shop, and the prices have increased and the portions have decreased, or the quality has decreased. We see it when we go to Chipotle. A year or so ago, a burrito was $10. Now it's $11. Extra meat was $2.50. Now it's $4.70. It's, we're seeing it. So we're already seeing it. It's just that the government has not come out yet and officially declared, inflation is here. And Jerome Powell has said, don't worry. The thing that's so interesting is that everyone has been saying, we got to reopen the economy. We got to put money into the infrastructure. We got to fix things. Our roads are crumbling. Our schools are crumbling. Our bridges are crumbling. We need to install solar panels on roofs. We need to get our schools back open. We need to get the economy going. We need to get people back to work. Yeah, let's do it. And then the second they say, like, okay, here's what we're going to do it, everyone goes, oh no, that will create inflation and that will tank everything in the markets. And so it's like, well, which is it? If you want to create these jobs, you want to get people back to work, but then there's this double-edged sword that it could create inflation. It just seems like right now there's no winning. Now, here's some good news that will propel markets next week. The House has, it was the House, right? No, the Senate passed COVID relief yesterday, on Saturday. And now it will go to the House. On Tuesday, they will vote. And then it'll go to Joe Biden's desk where he will sign off, assuming. And then the 1.9 trillion stimulus will pass, including some checks to people who are in desperate need. Will that create, will that spur on, economic growth? Will that get people shopping again? A lot of people have said, frankly, no. If I get this money that I so desperately need, I'm going to be spending it on, rent. I'm going to be paying off my debts, my back rent, mortgage, foreclosure stuff, all these real concerns that people have. I'm not going to take that $1,400, I think it's $1,400 I'm not going to take that money and go shopping. I'm not going to buy a new TV or a new PlayStation or whatever. I'm going to pay bills. So it might not boost the economy like people are hoping, but really, who cares about, like, people are hurting. They need help. They need relief. I think this is less about like stimulating the economy. We're going to reopen things soon. Things are already opening. That's what I've got here in my notes to talk about this week. The jobs report for February, way up. The expected numbers were 210,000 estimated jobs for February. It ended up coming in at 379,000, right? 379,000 jobs for February. That's a lot more than expected. That's great. Unemployment went down to 6.2%. California is thinking by April 1st they would like to reopen some theme parks and some stadiums. So that will benefit some companies like Disney, right, for theme parks, maybe Six Flags for theme parks. You have to think as an investor here when you hear them say, like, we're going to be reopening stuff. What's going to benefit the most? Where are people going to rush immediately back to because it's finally open and they can't wait to go? Movie theaters, right? New York City and California are going to be planning on opening some movie theaters, albeit at a 25% capacity. But hey, that's better than nothing. And people are going to be able to go back to movies. So maybe this finally means that No Time to Die, the new James Bond movie, will come out maybe a little bit earlier. I would love that if we could see this movie soon. I'm dying to see it. Let's go already. Come on, Barbara. She's the, woman who owns whatever. Barbara Broccoli. She's the woman her family's behind James Bond. And they're the ones who keep delaying it. Stop. I want to see this movie already. I wish they had sold it to Netflix, honestly. That would have been the best thing if they had put it on Netflix and then released it in theaters later. Because I would have watched it on Netflix the minute it came out, and then I would have gone to the theater to see it on the big screen. Oh well, whatever. We saw tech stocks get absolutely hammered. I want to talk about this because people have been asking, why are tech stocks getting hammered? If people feel like we're heading into some sort of economic downturn, I mean, the joke is we've already been in one for the last year, but nothing happened. Now, all of a sudden, everyone's talking about economic downturn. It's coming. It's coming. Meanwhile, we're adding like all these jobs. It seems like we did this like a little backwards, right? Like all of last year, the markets should have been sinking and plummeting and tanking. And now it should be finally in recovery mode, right? We should be talking about recovery here. The markets should have gotten hammered all of last year with the deaths, the job layoffs, the closings, the businesses going. I mean, I live in DC. I was walking around yesterday with a friend. Every other store, every other restaurant closed. Not temporarily, closed, done. It was sad to see. Now we're talking about finally reopening things. We just passed the stimulus bill. Markets should take that as good news. Jerome Powell has said we're going to do everything we can to keep the interest rates down, stave off inflation. That's good. California is talking about reopening. Theaters are reopening. There are rumors about a COVID passport, like a digital passport that says you've been vaccinated so you can travel again. That's good. That's going to be good for the hotels, good for the airlines, good for travel, good for all the leisure, the resorts and stuff like that. This is good news. But yet everyone's talking about like, uh-oh, here we go. And people are on TikTok asking, I'm worried, is the economy? If anything, you should be excited that, things are finally getting ready to reopen here. Anyway, tech stocks got hammered. Now, here's the reason that tech stocks get hammered. When there is talk of economic downturn or recessions or anything like that, or inflation. Growth stocks are relatively new. They're in their infancy. They rely on a lot of borrowed money. They take loans, they take on debt. People give them money. If it means higher interest rates that they're going to owe later on, maybe they're a little bit hesitant to take on bigger loans, more debt, if it means that they're going to be paying more. So maybe they slow down production. Maybe new companies don't get off the ground as quickly. And things slow down for these companies because it's a little bit more expensive potentially to produce, manufacture, build, borrow. grow, expand. If there is economic downturn, a lot of these tech stocks, I'm going to use Tesla as an example, even though people say it's automotive, it's tech too. Tesla will take a hit. It's a luxury brand. It's a tech. It's a technology company, but it's also a luxury brand. And if we enter into some sort of like economic downturn or recession or whatever, people will be probably purchasing fewer luxury vehicles. So that's why companies like Tesla go down. They also go down because of something that we have been saying on TikTok, at least the Stock Talk people have been saying for a very long time, which are companies like this are extremely overvalued. And all this new breed of traders and new breed of investors and new breed of people who are just curious and wanting to learn how Wall Street works, they have developed this mantra that like valuations and fundamentals don't matter. And they say like, no, we're in control of these markets now. We tell you what matters, and it's growth and the promise of a better tomorrow. That's why people like Tesla. They look at Tesla and they go, and any company really, NIO or other growth stocks that aren't automotive, they look at them and they go, it doesn't matter what they're doing today. What matters is what they're going to do 10 years from now. Profits don't matter now. They'll matter later. That's wrong. It will matter. And it's becoming evident right now. Now, maybe these stocks are just in correction territory. Maybe they're just pulling back to more reasonable valuations. That could be it. Maybe it could be economic downturn fears. Maybe it could be inflation and borrowing money fears. It could probably be everything. You know, it's funny. I used to say, someone would call me and say, why is the market going down today? And I would say, pick a reason, you know, pick a reason, any reason you want. That's why. Because there's not usually like one set reason that the markets are going down. There's usually several reasons. A lot of it is opinion based. One guy can come out and say, I think markets are down because of this. Someone else can say, I think markets are down because of that. If you Google articles and you read different ones, it's going to be differing opinions. The best thing as a new investor that you can do is expose yourself to all of them. Don't try to find confirmation bias. Don't be like, I think it's this, therefore I'm only going to read the articles that agree with my point of view. Read everything to get a broad, to become a better thinker and to get a more broad lens on why this could be happening. You want every single perspective as to why the markets are going down. It makes you a critical thinker. It makes you a smarter thinker. It makes you a better thinker when you're able to read articles and go, oh, it could be that. Oh, it could be that. And then also, you as a new investor or new trader, you can decide for yourself. After you read everything and you process and digest all the stuff that you've read, you go, you know, I don't know if I agree with that guy. Like, here's an example. Was it CCIV? CCIV, here's the example. When CCIV had their merger news with Lucid maybe 2 weeks ago, everyone was asking why. CCIV tumbled. I mean, it went from, I think, 60 to like 30 overnight. It was bad. Big sell-off. And everyone was like, but why? They announced the news. They finally announced that it was going to be Lucid. It should go up. Well, the reality was, my opinion was, it was largely buy the rumor, sell the news driven. For months, the stock CCIV had been edging higher and higher and higher as more and more people were thinking it's going to be Lucid, it's going to be Lucid, it's going to be Lucid. So they were already in the stock. They were buying in ahead of time to get ahead of the news. Well, then everyone was already in it, so there was no one left to buy, except when the news came out, everyone was like, well, duh, and then it went down because people were locking in their profits. And not only were people locking in their profits, but then you had the investors who had bought in the 30s and now it was in the 60s and they had wanted it to go to 100. I can't tell you how many Stock Talk people I know that said CCIV is going to 100 were panic selling, right? So you have a combination of things. Could it have also been that the stock was extremely overvalued? Of course, it could be anything. That's what I mean when I say pick something and choose. With a stock like CCIV and Lucid and the buy the rumor, sell the news and the valuation, and it was overvalued. The joke is, though, that so many people for the last couple of months were saying valuations don't matter anymore. Now, all of a sudden, those same people are saying, well, it was overvalued. So It could be a lot of things. Why is Tesla getting hammered right now? Could be that it's overvalued. It could be interest rate fears. It could be that people are looking around and seeing a wave of electric vehicles coming out now. Unbelievable amount of electric vehicles. NIO, Fisker, Lucid. There's more. BMW has them. GM is promising, I think 30 electric vehicles by 2025. The latest article that I saw today or yesterday, I guess, or maybe Friday, because days don't matter anymore, and I forget what day it even is today, is that Ford and their Mustang Mach-E, their electric four-door, can you really even call it a Mustang if it's a four-door hatchback-looking sedan? Anyway, they're saying it's a Tesla killer, that new Mustang is eating into Tesla's sales. I don't even know if the Mustang is available yet. So what's it eating into? Pre-orders maybe? I don't know. I pre-ordered the Bronco, which, speaking of which, I got to call that dealership and tell them to hold my reservation. Let's see what else we got here on the list. I think this is going to be a largely quiet episode here today. We're pushing 17 minutes. I don't know if I really answered my question from the beginning of the show. I usually step back on weeks like this. I sold a couple of stocks early in the week when we were up with a plan to buy back in if they dipped, but they dipped and then they dipped lower, so I stepped back. I don't like to try to time the bottoms of things when we are in turmoil, when the markets are freaking out. And so I kind of stepped away. I focused a lot on YouTube. I focused a lot on TikTok. Went to the gym a whole bunch of times. Just kind of took it easy last week. People always ask, how do you make money in these markets? And the reality is you make a little bit less. You can buy puts. You can short the markets. You can try to time bottoms and catch little bounces throughout the day. I don't like to do that because there's not any concrete news. Like I was saying earlier, there's no concrete news that is definitively pushing things lower and lower and lower. It just seems too much like a roller coaster. I sit back on days like that. If anything, like what I did a little bit was I slowly started adding to my long-term investments. I don't want to put in all my money right now because I don't know if things are going to get worse. So, but I also, things could get better and things could go up. So I might kick myself like I did last March when everything tanked. And I thought, I'm not buying anything right now because I'm expecting this to get way worse. And then we had this humongous immediate recovery in March. Everything went right back up. So lesson learned from that. What I have been doing was scaling in a little on some of my companies that I'm investing in. And, I'll wait. I'll wait now. If there's more big news that really drops markets, I will scale in a little bit more. It's going to be slow. It's going to be quiet. There's going to be a little bit less money to be made. If we enter a real bear market, that's when I'll start shorting stocks. That's when maybe I'll consider buying some puts. But in the meantime, when things are kind of in this, up and down, I'm going to sit back. I'm just going to hold tight. I don't think I made any trades last week. That's okay because I always talk about living below my means and having my ample rainy day fund to keep carrying me through these quieter times. I've said this 1,000 times. There is no guaranteed income in stock trading. There just isn't. There are going to be weeks and there are going to be months where it's very quiet and there's just not a lot going on. If you live below your means, if you have tons in savings, if you have other side projects to keep you occupied during those times, it'll be okay. If not, maybe you'll be a little bored, frankly. I was a little bored last week. There wasn't a lot going on. Now that we have this COVID relief bill that's probably going to pass and Biden's going to sign on Tuesday, maybe markets will rise back up. This is now the part of the show where we're getting towards the end here. I talk about what stocks are going to be having earnings next week. Earnings Whisper is a great Instagram page that I recommend everyone follow this week, and they only list their top earnings, what they think are going to be the top earnings for the week. Then I go through and I find the companies that stand out to me. this week is going to be relatively quiet for earnings. There wasn't a lot of companies that jumped out at me where I was like, oh, I can't wait to see what they do. There are only two this week. Wednesday evening, we have AMC, the movie theater, and Thursday evening, we have Funko, those little toy Funko Pops. I'm curious to see how they did over the holidays. I'm curious to see if this stock can start to recover. Funko was a stock that I traded in 2019. I also talk about trading in a bubble. I get asked so often, what do you think of this stock? What do you think of that stock? What do you think of this one? I don't know half of these companies. I pick my stocks, I trade my stocks in their range. They go down, I buy. They go up, I sell. They go down, I buy. They go up, I sell. And when something big happens, I step away. So what happened was Funko was just killing it. In 2019, I traded the stock almost exclusively. I know people have heard me say that I trade stocks that are around the $5 price range. Funko was not in the $5 price range. I think it was maybe in the high teens, low 20s. I traded that stock exclusively, buying probably anywhere from 300 to 500 shares at a time. Anytime it was at the bottom of its trading range, bouncing off of support, I would load up. It would rise back up, hit resistance. I would start selling off. If it crossed over resistance, broke out to the upside, I would hold on to a remaining portion of shares, wait to see what happened. If it entered overbought territory, I would sell and lock in the rest of my gains. Then it would start to push back lower, and I would wait to see if it goes back down to previous support or if it starts a new support at a slightly higher price. And that's what I would do with Funko. Then they had some bad news, bad earnings, bad management or whatever, and the stock took a beating. It went down to, I think, like in the 7s, maybe even went lower. Now we're finally kind of rebounding here. I think we're around 13 bucks right now. I've traded it a couple times over this year. But I've moved into other stocks that I've been trading. So Funko was one for me that I'll be definitely very curious to see. And that's pretty much it. I have decided to scrap the Q&A at the end of the show because I want to keep cash out relatively short in time. I don't want to ramble on for an hour. And also I want your TikTok questions to be standalone YouTube videos so you don't have to watch all the way to the end of cash out to hear it. Just makes it easier for you, I guess, so you don't have to watch a whole 20-minute show just to get to your 3-minute answer. I do answer a lot of your TikTok questions on YouTube, so I can have a little bit more time to talk because I'm only given 60 seconds there. So anyway, I think that wraps it up. This should be an interesting week. We got the stimulus to pay attention to. We've got the $1,400 relief checks that hopefully will be mailed out to people who are hurting. Economy it looks like it's reopening, especially with the February jobs numbers. And the Fed says that they're going to do everything they can to keep the interest rates low. So that's about it. Please hit the bell. Please hit the little subscribe thing if you haven't, if you would like to. And thanks for watching, and enjoy the rest of your weekend.